Hello, this is Nedi, your Forex coach. Welcome to our channel. And if you are coming here for the first time, we'll make you welcome. This one-stop channel that you can get very vital and informative guidance on how to become a good trader in the market. But in today's video, we are going to be looking at the very vital aspects of your trading. All right, and this has to do with entry rules. And we've identified entry rules as a very vital part of a winning Forex trading plan. And it's important that you get your entries right. Otherwise, your whole effort and objective for trading would be jeopardized. In this video today, we're going to be looking at best entry techniques that most pro traders, deploy in trading the market. And these are proven historical price behaviors around certain chart structures and fundamental market environments. Okay, and we'd like you to pay very close attention to just a few things that will point out that really will make a difference in your trading. This is a series on profitability, so we are bringing you very good information on how you can become more profitable in trading the Forex markets. All right, so today one of the first strategy we're going to be looking at is the breakout and retest of structures or certain key levels. Price can bounce off or break out from a corrective structure, from support and resistance or trend lines. All right, no matter the strategy that you have deployed in your trading, now you have seen a trading opportunity, you have a confirmed bias of the direction that the price is going to go for the day or the week, depending on the kind of trader that you are. It's important that you get your entries very right, because if you make a mistake in getting the entries right, you might be taken out of the market prematurely in a very good trade that eventually may deliver you 50 pips, 100 pips, as the case may be. After the efforts on searching it out, getting everything correct, but your entry is wrong, that can make you lose some money. So let's look at a few of these strategies that you can, entry rules that you can add to your trading plan that will enable you to trade more profitably in the market. All right, got this currency pair here. This is AUD CAD. All right, we have a strategy around it that we already have a bias for the market for today. We're expecting it to be bullish. Okay, so we're adding a few things to substantiate our bias and then the direction that we're expecting the markets to go. All right, so I said the first thing that you look at is breakout from a structure. If you've been trading for some time, all right, you can see the markets. Let's see a trending market. Price is trending upwards this way. All right, a few things that you need to pay close attention. Price has made an impulse, price breathes in and breathes out, made an impulse and then retraces, makes another impulse and then retraces. This is the area that you can locate corrective structures. If you are trading chart patterns as your strategy, okay, around here this is a corrective structure, that's a corrective wave there. Around here is also you can find another corrective structure. Another corrective structure may be like this in the form of a rectangle. Okay, all right, no matter which of them that shows up in the market, that one can form and give you the shape of a triangle. All right, market could move this way and now that's something like this. Okay, and now push it up. So you can see a triangle kind of shape here. You identify it and then wait for a breakout. So here could be a flag. All right, flag like this, and then a breakout from it can give you an entry. Okay, your strategy may have a rule that you look at the chart on maybe 4-hour time frame or 1-hour time frame. But when you want to enter the trade, it's very important that you step to a lower time frame, maybe 30 minutes or 15 minutes, to find details. You can locate details of price action. All right, so you'll be able to enter, safely into the trade. The trend is your friend. Yeah, even though the trend is your friend, if you really don't study the trend very well and understand price behaviors, you may still not be able to get this thing right. So we're looking at breakouts from corrective structures. This is one corrective structure. Breakout and retest of corrective structures. This is one corrective structure that formed here, and this for us is a flag. Okay, it's a flag. Just trying to have a free hand drawing, then flag. Price has been, bound into these support and resistance trend lines that you can see here. So what you do here is to draw a support, there's a resistance line here, right? And then the support trend line around this place a low, and you are waiting for a breakout. Most of the times, price will break out and now come back and retest that same level. It will break out and retest. So in this case, you see the market price breakouts. This comes here, breaks out, and comes back to retest that same trend line and now pushes up. So at the breakouts, you have to be mindful. I try to trade breakouts, retests of a key level. This was a level of resistance all the way from here. You can see it, and price has successfully broken out from it. Okay, a retest and bounce off from the previous level of resistance, which now becomes support, gives me a more assuring area to enter the market, right? So when the price has tested here, it has retested and starts to come up. We have maybe about maybe 10 pips back in the direction of the trend. Is a confirmation that the markets would most likely follow that trend direction. So how do you enter this trade? There are two market orders that I use in entering my trades. One of them is the instant execution. All right, so you are trading the market at the current market price, or you're using a pending order called the stop order, either buy stop or sell stop. In this case, I would prefer to come about 5 pips above this high, 5 pips above this high, around here, this price, to take my 5 pips above this high, to take my order, my pending order, at the time that the market has bounced off this straight line. So from here to this area can give me about 15 pips or 20 pips space. So what usually you'll find, if that is a correct setup, market will come and fill it in at this point and now continue with the impulse. So a breakout and retest of that level provides a good entry. Look at this, price is trending downwards. It broke this level of resistance, you can see, sorry, of support, it broke it, retested it, it came back to it. So when it retested and comes back to it, it's either you look for very good price reversal candlesticks patterns. All right, okay, these are the downtrending markets. You can be looking at a railway track. You can look for a bearish engulfing pattern. You can look for a gravestone doji, all right, or an evening star. You can look for any of them around this area. You come and take your trade. It's just that simple. Price breaks a structure, retest that structure, retest that level that it broke the structure, is a good opportunity to enter the market. And this is what happened. The price broke the structure, retested it, and now it pushed downwards. So these structures can be, maybe if you are trading chart patterns, you are trading continuation patterns like like rectangle, like flag, and triangle. These are easy to locate and to trade. These are other opportunities. This is a continuation pattern, confirmed continuation pattern, triangle. It's a confirmed continuation pattern. Immediately this triangle, sometimes can even use count waves. All right, if you've studied Elliott wave theory, within this triangle you find 5 waves, 5 orienting waves. So at the completion of the 5th wave, you will be able to know that fine, you're getting ready for this breakout to happen. A breakout from this whole corrective structure and a retest to that corrective structure should provide you, I just did a straight line here just to indicate direction. That doesn't mean that's how the price moves. Price will usually move up, retests that level before it starts to go in that direction. So you'll be on the lookout for a breakout and retest of a previous level, whether it's on a trend line or a support line. Okay, look at these trade call here. We saw this. There's a double bottom equal lows here. And equal lows here, this 1 hour time frame, and equal lows here, the 50 EMA and the 21-day EMA, they just crossed over, confirming this signal, this double bottom signal, equal low signal. And price makes an impulse and retraces to a level. It did a second impulse, all right, and retraces. We had a strategy that we shared that we use to trade trending markets using stochastics indicator. Okay, that has to do with a retracement within a particular zone between the 21 EMA and the 50 EMA, and that's exactly what has happened here. You can see it has happened here, meaning that the retracement most likely is complete for the market to continue in the bullish direction. You employ a lot of things that will substantiate your claim for the direction you want to trade. You can see price made this impulse. I'm using a Fibonacci retracements here to see. Most times retracements are complete at 1.8 retracement, and that's what we see happening right here. You see, price has gotten to 61.8. And another interesting thing you find is that at this level here was a level of resistance. You can see it was level of resistance. The price has retraced to that level of resistance. Retraced to this level of resistance, giving us another opportunity for a trade. Opportunity for a trade. And this is a bounce off in this particular situation. Price is seen bouncing off the trend line. You can see here it bounced off the trend line, so it's expected to bounce off the trend line, and is also retracing to a previous level of resistance right on top of the trend line. You can see this pink line here is a trend line. You can also see the orange and the blue line, which represents the 21-day EMA and the 50-day EMA. And price successfully, retrace in that zone. Retracing that zone. You can see a lot of factors I'm using to predict this price direction. Okay, and here too, at this point, you can move your candle to maybe 30 minutes or 50 minutes. Let's see. Okay, I have another trend line here. You can see this trend line price moved down, retested it, moved down, and touched it. Now it's about to break. You just be patient. I did a pending order on it, and that pending order is right at 0.90902. That's the price. That's where I'm expecting this particular bullish expectation to trigger. Price will break this level of resistance. Of course, you see it has bounced off the trend line. That's the condition. It has broken this trend line here. All right, and we can call this. We can actually call this. A flag. You can see this is a flag where this is the pole of the flag here. Is the pole of the flag. All right. All right. Now markets came back here. All right. right? So waiting for a breakout from this currency. So that most likely will happen. The price has broken this trend line and retest it. It will most likely happen at this level. So it will just fill it in and you are going in that direction. Okay, so resistance, I showed you an example of here, a previous level of support that was broken and it is retested here. It has retested here. So looking for some candlesticks patterns that will suggest bearish, this bounce off here. Price broke, retest, and then it's coming all the way down. All right, so look at the structures too. This looks like these are uptrending markets. All right, price moved into an impulse and it's correcting here in a rectangle form. It broke it, so this is the breakout. You can see that breakout from the resistance line, and then you pull back a retest. So at this level, this is a confluence level. One can seek to enter, the market. You can enter the market from this point. You can enter the market from this point, or you can come up here to do a buy stop order. You can put a buy stop order at this point. So the market moves up to this level, it fills you in, and then you are in profit. You find this happening over and over in the market. Again, market enters into correction mode. Right, there's a breakout, a retest, you are good to go. You need to be patient enough to see these things happen. Look at this again. This is a trend line, uptrend line, similar to the card that I showed you on the trading view account. Price moves up, touches this level. There's a trend line, moved up, comes back to this level. Here you can see a breakout from this previous resistance line. Just be careful, hold on, hold your peace and wait for the conditions to complete. Don't just immediately enter, okay, price has broken, so I enter. Usually this is price behavior. If you backtest and check, you follow the behavior of the markets. Exactly, this is what we are seeing here. Price has retested. It has retested. Look at these three candles here. This is a morning star right on a key level. So you are deploying candlesticks that will at key levels, starting candlesticks formation at key levels that will substantiate the claim that you have of the next price move. Price retested. This is now the candlesticks formation that gives you an idea, but this is going to move in this opposite, in the bullish direction. So your entry can be immediately after these three candles, 1, 2, 3, that's the morning star. So around here, you can put your entry, can take an instant order and come right below the key level and put your support. And of course, your other rules of risk reward ratio, the risk reward ratio 1:2, 1:3 to decide your level to put your take profits. All right, so look at another thing here. Market is trending downwards. Okay, see, this was a level of resistance support. Price pushed up, broke it at this instance, came here and retested it. You can see we retested it and forming a confluence. Previous level of support becoming resistance here, and market price seem to move all the way downwards. It pushes back up. All right, you can also use your Fibonacci retracement tool to locate some of those possible levels of reversals. And I like using Fibonacci level 50% and 1.8%. They give very good idea of market retracements when the retracement has actually completed. Okay, so exactly the same thing. You can see exactly the same thing. It pushes up all the way, coming down. All right, we have quite a lot of them. So let's look at market orders. The market orders, I told you the two market orders I use in trading is either the instant or I'm using pending order. And the pending order I use most times is the stop order, either a buy stop or a sell stop. Okay, depending on the market condition, you should be able to know, am I going to use an instant order or am I going to use a pending order? And also your schedule, maybe you're a very busy person, you are doing some other things while you're combining that with trading the markets. All right, okay, let's look again at this. Price makes this move up, test the level. Expecting the price at this point to pushed back up, right? So this is the market, assuming the market is trending upwards. So this uptrending market, an uptrending market. All right, price pushes in here and does this correction. So it broke this structure and it is retested. So when the price has retested, fine, there are possibilities. It can retrace up to this point. It can retrace to this level before coming back. All right. And to, when you start trading and you are making profit, the next thing you need to achieve is increasing your profitability, increasing your profit margin. If you take a trade and you made 50 pips, as you continue to trade and become more experienced, the profit margin, okay, for each trade, you'll be seeking to enlarge it, to make it bigger. And to do that, the magic will be done by your mastery of entry. Your mastery of entry. See, making your stop loss increasingly smaller, your mastery of entry. So someone can actually trade an instant trade, there's an instant trade at this level, and maybe come around this area to put a stop loss just to be safe. Something can happen, price will just come here and take you out. All right. So depending on the market condition, some can tell you at the midway of this rectangle here, you can come and position your stop loss here when you take an instant trade. But one of the safest trades, okay, to take, if you see a good candlesticks formation here, maybe you are seeing, I think, a bullish engulfing pattern right there around this area of retest, the retest of key level. Oh, fantastic. What can, price can do this from here, can retest, can push back from this level and get any midway, most times midway. If the next candle that forms just gets to this level, this is what I usually would do. Have this candle. This is a bear candle. Now let me change the color to red. Okay, so this is a bear candle, and this bull candle. Then the bear candle does not move more than 50% of this bull candle. It means that the bulls are still in control. So when this candle finishes forming, you can take an instant order, instant buy, and come around this area, maybe 5 pips below this bullish candle, about 5 pips below it, maybe around this zone, and put your stop loss. So your stop loss can be here. The next price candlestick is forming. Take this form and now move. You have succeeded in narrowing your stop loss while increasing your take profits level. Okay, so when the price has retested at this level and you monitor and see this kind of candlesticks forming at that level, another option is for you to come here at this high to position anything on that. In this case, that would be a buy stop. Buy stop here. So 0.98. So market has retested this level, and this is the high, and you have seen a bullish engulfing at this point. You can come here, put your buy stop, and then at the current market price, you locate your stop loss, and then your profit target can set it according to your trading rule. 1:3, maybe 1:2, as the case may be. So pending orders and instant orders, these are how I take them depending on the situation in the market. But the safest entry order is the stop order, either buy stop or sell stop, and you are doing that in the direction of the overall trend. In the direction of the overall trend, you can see that trade. Is a trade call that we made. All right, when it came to this point, actually I took an instant trade and positioned my stop loss somewhere around below this high. All right, but I made a call. This is very safe so that people do not lose their money. Around this area, when this trend line would have been broken around here, when the trend line would have been broken, this price, trend line would have been broken and retested. So you can take your trade, come to this place, this low, maybe 2 pips below the low. Let's check how many pips that is. Oops, it's about 46 pips. 46 pips. But then look at what you are targeting, because this is the next level of the targets. It's targeting about 120 pips. 46, that's about 1:3, exactly 1:3. Yeah, 1:3. This huge this works. So a push above, retest on this level, you're good to go. It has bounced off already on previous level of resistance, which has become support here. It is bouncing off, and it has bounced off also from the trend line. Let's see, the trend line has bounced off from it. All right, so move your time frame to a lower time frame, 30 minutes, 15 minutes preferable, and then you'll be good to go. All right, so the next trade, this opportunity entry technique that we can look at is structural price behaviors. Structural price behaviors at certain levels. Structural price behavior at certain levels. All right. Maybe market has come. Maybe let me assume you are trading Bollinger Bands. All right. Assume you are trading Bollinger Bands, and of course, I assume this is the upper band of the Bollinger. This is the middle band, and here is the lower band. And price. This is the price chart now moving this way, and it is at this point. You can observe something. This is an equal low, all right? This is an established support area. So you can take a line and identify, mark that area, find this established support area. The Bollinger Band, the lower band, is right now playing the role of a dynamic support. All right, it's playing the role of a dynamic support at this level. All right, and this can be part of your maybe trading strategy. So it comes here, you know, when price touches the upper band of the Bollinger Band, it bounces off, so you can sell at this level, buy at this level. So it's expected when price gets somewhere here, you begin to look for sell orders. So at this level, you are seeing price is now beginning to rise. Price is beginning to rise from the lower band of the Bollinger Band. What do? You can take your tools. Let's use this. You're creating a window, an entry window, maybe about 20 pips or 25 pips wide, and move your time frame to lower time frame, 15 minutes time frame, to look at structural behavior of price. When price wants to move in a particular direction, there's a way it makes that move. It will begin to make higher highs and higher lows. You see these higher highs and higher lows to do this return. So you are looking at minor structures now within this your entry. Let me do this. Minor structures within this your selected entry window, what you can call price reversal zone or region. Price moved up, returns here, which is up, and then returns to this level. You can see it's making higher lows. It's making higher lows and higher highs. It's a small, impulse. It retraces, pushes up. When it begins to do this consistently, you can be convinced that the market is going to go in your expected direction. You have equal lows here. You have the Bollinger Band. Price is dropping on this, so you don't want to take chances. You don't want to rely only on the Bollinger Band, but you want to look at structural behavior of prices on lower time frames. So you can use the same thing. This was a level of resistance.
and price is now returning to that level, giving you a confluence situation, and this can become another level of support. So while here, you can come around this level to position your pending order buy stop, or you can trust the conference level, all right, previous level of resistance becoming support by taking an instant order right from this level. And then below the low, where the price hits the Bollinger Band, about 5 pips below it. So from here to here can be giving you about 15 pips of stop. And suddenly you see market price going in your direction. So those structural behavior of price moving and retesting a particular level, you can do that. The markets, your trade setup, the strategy requirements complete, and price has entered into an area of bounce off. I just use a scenario of Bollinger Bands here. It can be any other thing. It can be levels of support and resistance. Maybe here, level of support and resistance, price pushes back. So when it gets to this level, your expectation is that it's going to come all the way down. That's if the market is trading sideways. If the market is trading sideways, so you can apply this price behavior at key levels. Look at this. Look at this. Price was found trading sideways here. You see, it did this and did this. So the next one, the third one, is certain. When the price bounces off a resistance area like 2 times, the third one is almost very, very certain for you to take a trade. Let's move these to 15. Let's take it to 30 minutes first. Let's see. So let's create our window. Price has gotten to that level, so you want to be sure. Let's create our window from here to here. It's about 20 pips window. Let me use this to create it, which you can call price reversal zone. Okay, because market is expected to reverse here, so you create your total pip window here, and let's see what the market did within this area. You can see it's pushed down, tested, came all the way down. Now at this point, it came to the previous low. This was a support. So at this point, this is a very good point of entry here. You can do an instant trading from here, and then from here to this level, you can see is the 14 pips, which will be your location for your stop loss. You can see market is making lower highs now. It's making lower highs. Lower time frame. But if you're looking at it from that your 1 hour time frame, you don't see these details. You see it pushed all the way back up again and returns back to this second level confluence, forming another confluence. So if you miss the entry here, you will not miss it at this point. At this point, you can enter an instant trade, or you can come here and put a sell stop order. You see, the price was here. Sell stop order at this point. What happened? It pushed all the way down. Now, use structural behavior of price at lower time frames to get a very good entry, and that worked perfectly well in this particular scenario. Time frame back to 1 hour. Check how much it delivered. All right, let's check how much many pips. So back to this level from here. As many took that trade from here is your. Wow, they have done how many pips? 70 pips, and just 15 pips. 15 pips stop. So that gives you about 1:5. Amazing. 1:5. This is good. This is good. Another way to locate entry, can look at divergence, disagreement between price and indicator. All right. And to do that, I usually will select the MACD indicator, average convergence divergence, to locate such situations in the market that will guarantee good entry. That will guarantee good entry. All right. Look at this point. Look at this point. This is stochastic indicator. I can use my D and stochastics. Look at this. Price is seen to make this a low and a lower low. Right? This is a low here. This is a low here. And this is a lower low. So the indicator by implication is supposed to do the same, but it did not do. What the indicator is doing here is a higher low. See, the higher low is a little bit small, it doesn't matter. Let me put a vertical line here so that we can identify the two lows. You can see that this low, price making lower low, so this indicator is supposed to also make lower low, but it did not make a lower low. So there is a divergence. There's a disagreement between price and indicator. Price and indicator. What do you do? In this case, when there is a disagreement between the direction of the price and that of the indicator, we call it a divergence. And price will immediately align after those 2 points that there's divergence. Price will align with the direction of the indicator. Indicator is always right in this case. In divergence, indicator is always right. So if the indicator is pointing upwards, we call it positive divergence. If the indicator is pointing, is slanting downwards, we call it negative divergence. But in this case, the indicator is pushing up, making as well the price is making lower lows, while the indicator is making higher lows. So there's a disagreement. So this is a positive divergence. So at this point here, expect price to align with the direction of the indicator. Right, so we can deploy a lot of things here. You can put the circle, because this is on a 1 hour time frame, and let's move our candle to 30 minutes time frame, because we have seen a divergence in the markets. Okay, that is here. All right, you can see what the markets did right there. Look at it. Price pushed. Okay, price made this move into this point that we identified the divergence. Okay, it moved up here. It pushed up, retested again. Retested again. You can even do some trend lines, micro trend lines here. You can do that trend line this way, right? Waiting to enter the market when there is a breakout. You can also agree with me, there is a resistance level here. Okay. Because I've identified this, look at the point, it was here that you identified the divergence. Price pushed up, retested the level again, and came here and broke the this resistance line, broke it. So you'll be getting ready to enter the market. Getting ready to enter the market. This is another level of resistance. You can be very patient at this point. Okay, to locate a retest. And there was one here. There's a bear candle here. Let's move to 15 minutes and see if we can get more details on that place. All right. It doesn't seem to be very pronounced. Look at the retests. Let's move to maybe 5 minutes. Let's see. All right. So let's take this in. Okay. This is a second retest. Okay. Making to lose. Price pushed here, returned, and then you can see the time that it broke this resistance at this point. It broke it here. It made a high, a new high, made a new high here, and you can see that market retraced. It retraced the previous level of resistance, retraced to it and pushed up. So while the market is here around this high, 5 pips on top of it, you can come and place a buy stop. Place a buy stop and come all the way. You can look at different lows here. This is a very pronounced low here. These are that pronounced low here. announced low at this point. So these areas can be your stop loss when you are taking this trade. All right. The next low here, you should position your stop loss around this area, maybe 5 pips below it, around here, and then this place would have been your entry. This level would have been your entry when the market price was here. Here will be your buy stop order, and here is your stop loss. Your stop loss. Here is your pending order stop, pending order buy stop, and you are good to go. You can see what the market did. It's huge. Let's move back to 1 hour and see what happens. Your stop loss, let's measure the stop loss. You enter the market around here, your stop loss here. Stop loss 22 pips. That's nice. Stop loss 22 pips. And how much profit from here to this level? 130. Amazing. This is almost 1:2. Yeah, 1:5 point something. 1:6. 1:6 around this level. Huge, right? Yes. So these are different ways that you can locate an entry. Find you have developed your winning trading plan, and I said entry technique should be a vital part of that plan because of the role it plays. If you enter wrongly, you can be prematurely kicked out of the market by the price. Okay, and studying price behavior around certain key level very important. Combination of markets, candlesticks, patterns that shows the direction. It gives a guide on the direction that the price will go is very, very key in this stuff. So I believe this could have added some value to you. And if you like this video, would like to click that like button, subscribe to our channel, and also don't forget to click on the alert button so that when next video comes, you will get the alert to join and watch the video. Thank you so much for visiting and watching this video. I will see you again in the next video.